Dear colleagues, friends, thank you very much for accepting the invitation. In today's meeting, the Board of the Central Bank of Armenia decided to decrease the key policy rate, refinancing rate, by 0.25%, setting it at 8.25 respectively. Mr. Galstyan will deliver the press release. You'll ask questions after that. Thank you. In the first quarter, the April session, the Central Bank Board decided to reduce the refinancing rate by 0.25%, setting up at 8.25. The Board agrees that lower refinancing rate is necessary to continue to meet its price stability objective of ensuring an inflation rate of 4% over the medium term. In the first quarter of 2024, it continued falling, registering minus 1.2 in March, and then core inflation also continued to decrease at minus 0.7% year-over-year in March. In the first quarter of 2024, risks of slowing economic growth globally and in the key trading partner countries of Armenia continue to persist. Global inflation continues to decline, but rigid prices continue to remain relatively elevated in key trading partner economies. At the same time, overheated labor market conditions continue to contribute to sustained high demand conditions in key trading partner economies. Geopolitical tensions in the Middle East since the beginning of the year continue to create risks for future growth in global energy prices and potential disruptions in global supply chains. In this context, it's likely that the key trading partner central banks, and in particular the US FED, would maintain tight monetary conditions for longer. Consequently, weak deflationary effects are expected from the external sector on the Armenian economy. Economic activity in Armenia remained robust in the first quarter of 2024, continuing to be largely driven by meaningful growth in the trade and industry sectors. The latter continues to be impacted by certain short-term factors carrying real uncertainties with respect to the sustainability of economic growth and its long-term outlook. External demand for domestic services is slowing, while high growth in private investments continues to contribute to domestic demand. At the same time, risks for additional demand pressures stemming from fiscal policy continue to persist. The inflationary environment in Armenia continues to remain low, driven by the monetary policy implemented by the central bank in recent years, weak deflationary pressures from the external sector, and the implications of the appreciated dram. At the same time, growth in labor supply has somewhat eased labor market conditions, which has been reflected in cooling wage growth as well as declining non-traded sticky price inflation and inflation expectations. In the face of high uncertainty and given its commitment to achieving the price stability objective, the board considers multiple scenarios during its deliberations. On the one hand, the board discussed scenarios where possible underlying developments, including tighter monetary conditions in key trading partner economies, as well as uncertainty related to the country's risk premium and neutral interest rates, would require a tighter policy stance relative to current market expectations in order to manage risks that threaten the price stability objective. On the other hand, the board discussed scenarios where potential economic developments, including continued growth in domestic labor supply, as well as a rapid deceleration in demand, would cause inflation to persistently remain at low level. This would imply a more rapid and aggressive downward path for the policy rate than what it is currently priced in markets in order to sustainably bring inflation back to target in the medium-term horizon. In result, balancing the aforementioned risks in both directions, the Board of the Central Bank of Armenia finds it appropriate to continue gradually easing the policy stance. The Board will continue monitoring risk scenarios of the economic development and stands ready to take adequate actions to ensure that the price stability objective of 4% inflation over the medium-term horizon is met. Thank you. Armenia. Mr. Galstyan, first of all, as regards the target of 4%, last year you announced that you might be getting to those 4%. Will it work with reducing the refinancing rate? And the second question, as regards the fluctuations in the currency rate, specifically USD related and appreciation of Armenian dram, what were the risks for exporters specifically? Thanks for the question. As regards the target, when we define the target, we define the target for the medium term, because if you consider a 1-year span, then the policy-making price for the society might be very high. Let me define what I mean. I'm sure you remember in 2021, 22 and 23 we had inflation higher than the target, and the central bank, despite increasing it in a faster pace, nevertheless encountered high inflation, nevertheless. So while perceiving that on the one hand we wouldn't go for the extremes, because we would rather understand what difficulties we could have created for the economy on the one hand, and on the other it was the challenge of reaching that target in the medium term. So while combining these two, we chose the more, we think, a more balanced policy, though we were higher than the target for a certain period of time, but then we returned. It's the same story now from the other end. The difficulty here is the board thinks that the deflation trends might stay in the longer term, might stay with us, or maybe through our actions we're going to come back to the target. So the opinion is the same. Quite definitely we are going to be doing everything we can so that the target that we have and we're going to be reaching in the medium term is there, is reached. That's what we do currently. Okay, what about the geopolitical developments, Middle East, another war, Ukraine, Russia, may they influence? Yes, of course. In the press release, as I read, you may see it on the screen. That's kind of the typical scenarios, standard scenarios in which the inflation might go higher than we expect it to go. In such scenarios, the reduction in refinancing wouldn't even have happened by the central bank, since you consider that we're kind of forced to raise it. However, the largest majority of the board currently thinks that there is the best scenario we're following at this moment, where the economic phenomena that might take place in our economy bring us to the point that we should be looking into a more expansive monetary policy, extenuating it kind of incrementally. Now, as regards the currency, we have some exceedance of demand compared to supply, in result of which, yes, the currency rate has dropped, not significantly but a little, meaning the nominal price of the Armenian, the rate of the Armenian dram is 390, before it was 400, so there is like about 2.5% depreciation of the USD. That's mostly because of exceedances in the influx. It's because of various reasons. You know that we have significant trade flows. Those trade flows might influence touristic flows, might have influence here. Capital inflows might have influence here. It's hard to say which factor specifically has contributed to this situation. However, what we see on the market is the weaker demand compared to supply, which means there are people who want to purchase US dollars, but those who sell the US dollars, I mean those businesses, they have larger volumes, larger momentum. So the central bank has been following these developments. The main goal for us is not to allow a situation on the market where there is no natural flow and respective ratings. So since this is a freely fluctuating currency rate, then we might intervene when the functionality is disturbed. Okay, if you mean exporting businesses, yes, it's a risk factor for them. They will have to take that into account in the business operation thereof. And we will try to draw the policy that will help us in being as reasonable and cautious as possible. Sputnik. Thank you. I want to know the trends of demand, the financial market, of the consumers, I mean. So I'm trying to understand whether in this context it is possible to somehow distinguish them in the loans, though part of those, as mentioned, were aimed at, I don't know, purchasing furniture for households. Mostly, I mean, this demand comes from the mortgage sector, from the creditors. Is it possible to distinguish that specific group of people that is now loaded with servicing the mortgage on the one hand, on the other hand just takes the stationary spending that does not depend on anything specifically, but would come to a third of the growth in demand, pure growth in demand. So if there are such trends, then what would be the reaction of the bank? It's very difficult to do that distinguishment. Since I was a statistician in my former life, I do not remember any statistical template that would allow us to identify the boilers, kettles, or stoves. There is no such breakdown because all of that is under one line, one article in the reports from the banks. What would be the reaction of the central bank? I might generalize a little with this. What could be the reaction of the central bank, for example, if you see that compared to the income, the consumption promoted by new credits growth? Well, supposedly we might have to do a little more there financially. Meanwhile, that additional demand might create certain inflation-related pressures, and we've been discussing them in our A-type scenarios. Okay, any demand factors that might be identified noticeably, meaning like any scalable growth trends among the local consumers? Have you been observing, not tourists, I mean, given this is a touristic season now, but the locals, because of the growth of income, any such trends observable? Well, the demand's still high and remains there. However, I should be saying that the second derivative, I mean, it's hard to predict that the second derivative is going to be larger. There is demand, but it's not at the level that would instigate any risk scenarios, spark any risk scenarios to which we could have reacted in a different policy of the rate than what we have now. So we're thinking the risks that pull us downwards in our economy, respectively meaning the low inflation would persist, are dominating. Okay, as regards tourists, any consumption more than usual by the tourists? No, there are two phenomena there that we've discussed yesterday and today. The first is that for the same period last year, I mean March to March, the number of tourists incoming dropped 3%, and the second phenomenon is that expenditure per tourist compared to last year has also dropped, meaning that external demand is softer than we've had previously. Use the microphone, please. Okay, so we exclude the possibility of foreign currency coming to Armenia with tourists. Rather, no, the volume's almost the same, essentially. Like 3% can't play a big role, but there are other financial flows too that are directed towards Armenia, come to the financial sector of Armenia, or do not come to the financial sector. And the second phenomenon that's related to influx of foreign currency is trade transactions, imported goods that might be exported afterwards. So all these flows have certain impact on the supply. I'm sorry, I was not quite attentive. You said, to what extent would the reduction in the rate, how much would it impact the financial market? No, no such question was discussed. As regards loans, elasticity in the interest rate might play a role, but it's rather lagging. I mean, you'll definitely remember when we raised the interest rate from 4.25 to 10.75, meaning 6.5% essentially, the loans did not grow. They grew, but very little. Now we have cut a little from that peak, like 2.5%. We can see that there is certain impact from there on the market of bonds, sovereign bonds, because from the previous decision and up to date there has been like 6-7 weeks, so we can see the curve of profitability dropping a little. As regards the credits, no significant impact from reduction in the rate yet. No significant reduction in the rate, in fact. Mr. Galstyan, one question. In the previous session of the government, there was a discussion related to the crypto assets and regulations, maybe, and the central bank obviously has things to do here. Can you tell us what would be the first steps? How do you see the regulation of the crypto market in Armenia? As far as I know, there are no regulations, right? It's not regulated. We have developed a draft law on crypto assets. Very soon we are going to start circulating it. The main idea is being in harmony with the European policy, because we've mused upon it several years, and last year the European Union launched that project. They started the regulatory framework of the crypto sector. We've been following the directives and guidance from the European Union. There are quite important articles there that might be of essential significance for Armenia, specifically the issue of traceability, the travel rules and everything. So you have to be able to identify a transaction and the one who holds or performs the transaction. It's very important because there are risks there, emerging risks, potential risks. Secondly, that same activity, same risks, same regulatory framework approach is what we're looking at currently. So I guess in the nearest future, when we circulate it, then we might be speaking in more pragmatic terms, because we've had several meetings with the private sector already, mostly the business representatives that have been in that sector. So we'll have to just check opinions about the draft law. Something mentioned about the wiring, not cash transactions. Will the state budget get into that? No. Non-cash does not mean more revenue for the budget. More revenue for the budget is when it comes to the taxation sector. Start paying taxes. The non-cash is that you can purchase crypto assets only through a non-cash method. I mean, you can't supposedly. That's what the whole regulatory framework is about. I mean, you can't go to a crypto change, pay 500,000 or 200,000 Armenian drams, and fill your wallet with some crypto assets. It is the following. If you want to purchase a crypto asset, then you will have to do it in a non-cash manner by sending a wire transfer to an account and getting the respective crypto asset on your account. Does that draft law regulate the ICO and crypto stock markets? Well, we have a special section or chapter related to mediators, brokers, but since this is more a monetary policy discussion, we're not moving into the crypto discussion. So I guess it's better if we just publish the draft, you read it, and then we have a different discussion. May I conclude that that scenario mentioned is the base scenario, meaning that the demand for workforce will continue growing, and because of the acute demand, there will be less growth in salaries. Well, we don't have that base scenario anymore. No, I mean, any probabilities there? Yes, what you just described is not the demand, but the supply. We think that the demand for workforce and the supply grow, and will continue growing, which will definitely extenuate the pressures on the labor market. In result, we will have a better composition of demand and supply that might let us reduce the refinancing rate currently. That's what we're doing, by the way. There is another important point. There were these services with more sticky prices. I mean, when the prices for the goods go down abruptly, some behavioral manifestations of the foreign market, we had like a layer of services that would continue growing. Remember? So that's even milder than it has ever been. So that is why the A-type scenario, where inflation might go higher than the participants of the market expect, with the central bank responding towards increasing, that's more comfortable for us, so that we're not concerned now. Okay, so we may infer that recreation and culture things are more extenuated. Yes, non-exporting sticky price index, that in our perception is the best index that exists in the world and perfectly expresses the reality in that regard, or manifests it. So when you look at that index, I don't know, it's golden color, yes, that's 2.4%, but it was like 7 to 8 at the time. I'm sorry. What could ever be the reason that salaries are still far from those non-regulated prices? Because like a year or two ago, it was the opposite. Well, not the opposite picture, but definitely those non-regulated services prices would also grow independent from the salaries. Okay, private salaries have dropped too, by the way. Like they were dropping this year, but there's still 8.5% growth there. Growth over growth. And there's another 2.4 over those 8.5. So, but it's less than what we expected. So 30.5 is a significant drop. From 8 to 2.4 is again a significant drop. I'm sorry. As regards the behavior of the banks, would you say that they still try to involve new customers, despite the rates it wouldn't slow down? Well, no. In the most recent period, remember, there was this time when the pivot of the bank's business was wire transfers, remittances, new accounts, servicing, so non very direct activity, because the direct activity in fact is credits. So currently we can clearly see active crediting policies in the banks. Look at the figures specifically. I think I have them now. So the total volume has grown by branches significantly. For example, manufacturing, power generation, agriculture, construction, trade, consumer loans 24.6%, mortgages 23.5%, construction 11.2%, meaning there are certain loan branches that are quite active, have been very active. As regards the transfers, wires to Russia, I'm trying to understand whether the overall volume of those bilateral traffic is still the same, or maybe it's now concentrated in one or two banks, or maybe after the sanctions on MIR cards, then the absolute volume has dropped as well. Yes, we have a reduction in the absolute volume. Supposedly you meant from Russia to Armenia, or from Armenia to Russia, right? Well, if you have both, that would be great. Although we have the net figures right there. I'll ask Haik to deliver them right now, but to our observations, we've had some reductions this year. this could partially be related to the operations or limitations in operations of payment systems, but there are larger and more influential factors there, specifically geopolitical and economic, that might have significant impact on the traffic. I think sometime later we might go back to another study of the labor migrants, because we've been doing these survey studies regularly, and results in those surveys might identify certain behavioral trends, like when there is a situation in Russia, there is a situation in Armenia, the economic situation here and there is also related to currency rates, and there's also this relative salary thing. So I'm trying to understand whether people would, with the same commitment, continue working in Russian Federation or not. Some of them come back to Armenia and would rather prefer working in Armenia, because that gap of relative salaries is much smaller than it was like 10 years ago. It's not only about largest destinations. The main labor migration is Russia. Well, we're not going to be concentrating on Russia. However, previous surveys showed that the respondents were mostly those who worked in Russia. Would you please remind us when was that survey held the last, and when is the next one planned? Well, what I said are just plans, nothing specific, because we used to do that at the time. I don't frankly remember when that was done the last, but several surveys I took part in 2006, 8, 12, 14, these are the years. And at that time the survey was held in several phases, and held not only in Armenia but also in the largest cities of Russia, even Los Angeles once. And we collected a lot of very interesting data, by the way, and also those surveys were carried out among Armenian migrants before they left, like January, February. Now, I'm not quite sure how accurate we may be in designing the best survey, but we'll let you know. Okay, let's give the floor to our colleagues as well. If we're done with the transfers hike. Yeah, just the figures, thank you. January, March, of course this is also being published on our website. You can find that on our website. So for January, March, the influx, the transfers to Armenia has dropped, if we're considering the non-trade related. And with the trade related ones, we had 55% reduction in January, March, compared to 2023, January, March, naturally. So factors, well, since these trends were observed recently, then we've been having these trends the last year. I would rather say they are more related to the real market, real economic processes like adjustments in the salary gaps, etc., rather than payment systems, or problems pertaining thereto. These are more long-term. Now, as regards the most recent data of the World Bank, transfers from Armenia to the United States are, in fact, growing. What do you mean when you say the last? Well, January, March, that's the freshest data we have, though with the specific weight, I'm sure Russia is going to be bigger. From Armenia to the United States. From Armenia to United States. Okay, so January, March, yeah, almost equal as to Russia. But in our case, the inflow is more important, because the others are like just 100 million something, whereas inflow is definitely $500 to $700 million. Okay, as regards the MIR system, the move of the pensioners from there to other commercial banks, cashbacks, etc. Well, I suppose you can be helpful with that. Because as regards signals, I was just asking Kaik today as well. We're trying to get some of the signals. Is there a group of people who have problem there so that we help them? And if there are such problems, then essentially we're not getting signals. We're not. Supposedly the problem is solved. Otherwise, I think many are watching this press conference right now. If there are such problems, if there are people who have problems, then through the social service, I'm sure, they can do something. I mean, can go to the social service, and they've been in permanent collaboration with us. But we don't see the weight of the problem now. Okay, Mr. Galstyan, as regards the pensions for those from Artsakh, meaning the cumulative accounts, they were saying that they could have brought them and continue with their cumulative accounts here in Armenia. Well, the problem is not technical, not equipment or data related. It's a financial problem, and I am sure it definitely needs a comprehensive solution at the government level. We might be further dealing with the consequences of that decision, meaning these pension funds will make the decision of doing it together with the government. So I'm sure they might be significantly flexible, so the question will never be pay or not pay. It will be done properly, decently, but it's a matter of status and citizenship, so that they come to the legal field. Those funds are still growing. The pension funds, I mean accounts on pension funds, well, naturally they are not making transfers anymore because they make transfers from their salaries or any other way. But those accounts are there. They have been reinstalled. There's no problem with that. Recently we've been observing growth in loans to legal persons. This is mostly loans to the industry or trade and services. I said, for the part of industry, we have without the financial part of it, weight of the resident loans on the previous page, if I'm correct, yeah, is that minus point, well, there's some drop there, point of drop, like 5.9 specifically. Well, there is some reduction in trade as well. A currency rate might have an effect here. I mean, we should definitely filter it through. And without currency rate, I'm sorry, so that it's clear. All right, so fixed rate. Industry dropping to by 4.3%. Agriculture growing 6.2%. Construction 7.8% growth. Consumer loans 7.1, mortgage 3.9, restaurants 2.4. So there is some reduction in industry, some growth in branches that have the largest specific weight in the GDP, contribute to growth. Okay, if you had the chance to discuss, I don't know, maybe with the Ministry of Economy, why would that happen? Or reduction in the industry is because of the ongoing expenses, or maybe ongoing have dropped a little and the rest keeps the same pace. Well, it's hard to say, but we'll let you know. We'll answer that question when we have that information. We'll tell you the details. Other questions? And the US Federal Reserves, I mean the policy stance, what impact might it have on us now? Well, it's a category risk, because keeping the interest rates for a long time on a high level It's hard, and I'm sure you remember. I have always been more skeptical than the market, expecting that there are going to be 6 indexations, reductions. We expected less. Many think that there might be even no reductions from the FED. What impact it might have on our interest rates? Well, a significant impact naturally, because FED interest rate is the global risk-free rate, and all the others derive from it. Respectively, we are constrained to a certain extent to drop it too low, because there might be problems with outflow of capital in that case. Respectively, the space of policy implementation might shrink to a certain extent. Nevertheless, currently, it was not that significant in terms of the risks we touched upon, though it's among the A-type or A-category risks. Any consequences for our financial system? I mean, upon all the traffic of the assets? Well, I guess not in the short term. We met the international investors in Washington, those who had investments in the bonds, the sovereign bonds, with quite positive scenarios they had regarding the macroeconomic policy. And it turned out that there are longer-term investors in the sovereign bonds sector of Armenia. At least no concerns, no caution, at least on the part of our colleagues and partners. So we're thinking that the risk premium that we currently have, I mean, between the euro bonds and the Armenian bonds or the US bonds, so that risk premium reflects on the situation, and we don't see risks there currently. And one more question related to the loans from by citizens of Artsakh. The Ministry of Finance stated that those loans would still be studied and the suspicious ones would be filtered out. So has that process started, and is the central bank participating in it? Well, there have been some inquiries from our colleagues, but I guess you have to address that question to them, because they are the owners of that process. Other questions? Thank you.